All right, 2025, right around the corner, and I know you want to make some cash trading. So today, I'm gonna tell you exactly how I get numbers like this on a consistent basis. All right, so to start, I'm gonna take you guys through my strategy. All right, if you don't know already, I trade Smart Money Concepts, or SMC, and it's a way of trading that focuses on institutional money. Big players like banks and hedge funds leave clues in the market, and SMC helps us spot these clues and trade alongside them. All right, so here's some of the core ideas of trading SMC. Liquidity zones, order blocks, and market structure are the three main things we're gonna be focusing on. To start, market structure comes with understanding trends, right? Higher highs, higher lows is an uptrend. Lower highs, lower lows is gonna be a downtrend, all right? Liquidity zones are areas where institutions are likely to place their trades. They're like traps for retail traders. And down at the bottom here, we have order blocks. These are key price levels where institutions have entered the market, and they act as strong support or resistance depending on if they're bearish or bullish. So we can see liquidity zones and order blocks can tend to act as market traps. Market structure and order blocks play off support and resistance. Understanding concepts of market structure, that's going to be your trend analysis, which is very important. You always want to trade with the trend unless you're looking at a liquidity sweep. And understanding concepts and liquidity zones is going to be understanding your institutional trading strategies and trying to trade alongside them. So now that you know these concepts, let's go to the chart so you can understand how to use them. Real quick, I want to show you guys some pros of SMC trading. You have very precise entries. You have clear entry zones and reduces a lot of guesswork. Most of the time my stop losses are very small, so I can get a couple more contracts and enhance profit without worrying about blowing my account or anything like that. Like I just said, trading with institutional levels increases potential gains while minimizing risk. Like I said, stop losses tend to be very small and you can catch huge moves off of trading SMC. And lastly, we're avoiding fake outs, because these market movers are the ones who are faking you out. So trading with them, we don't have to worry about that. So now I'm gonna show you guys in action how this works by taking you guys through a trade I took today. And if you wanna see that live, I have a video on my page. First time trading live, I think it went all right. We made a couple bucks, so no complaints with that. So going back to these three concepts, market structure, liquidity zones, and order blocks, I'm gonna walk you guys through exactly how I made money today. All right, so we're looking at this on a very small time frame, 5 minute. I was more on the 1 to 2 hour when I actually took this trade, but it's just easier to see on the 5 minute. So as you can see, we shorted the market. First off, liquidity sweep, number one thing I look for. We see this break of structure, it's marked as. We took out this high up here. We sweep liquidity with this new high, right? Because if you think, there are a lot of retail traders in short positions that might look something like this, right? And their stop losses are right above this high. So institutional traders are gonna go take out this high so they have orders to fill. And with that, we have momentum to the downside. Now, our second point, order blocks. As you can see here, we have a huge order block. Now, granted, this is from news, so you're not gonna see this very often. Price barely touches into this zone before we start our downtrend. Lastly, market analysis on the half, we'll go to the half hour. I actually traded against the trend with this trade. You can see we have, way down here, we have a low, right? Higher high, higher low, right? Our low down here is higher than this one. Here again, we will make another higher high, higher low, or some higher lows down here, and one last higher high. We sweep liquidity with this high before we start this consolidation, which I was able to catch a good move off of before we began to consolidate. And that's a trade I took today. Very simple, those three concepts, I was able to make this trade. Even with the strategy as good as Smart Money, you still need good risk management so you don't blow your account on your first or second trade. So I'm gonna take you guys through my risk management strategy and how I don't blow my account. First, you have to define your risk per trade. For me, a little too high, no more 10% of my account though. I don't trade with a ton of capital, so I have this a little bit higher than it should be. Ideally, you're risking around 2 to 5% of your account per trade. Just to show you guys what I actually mean by risk management, if price were to invalidate this position and I would hit my stop loss right here, top of this red line, I would lose 10% of my account. All right, so for me, that's around $200 I would lose on that trade. Step 2, you have to set clear stops. All right, I was just talking about it on TradingView. This is my stop loss, very clear. If price goes above this zone, my trade idea is invalidated. Price won't just randomly reverse and I'm out the trade, I cut my losses. So often that's gonna be an order block break or a break of a previous high. And like I said, you just cut your losses from that point out. Lastly, stick to your plan. All right, don't chase trades outside of your zone. If it's not a clean setup, just let it go. All right, it's better than missing out on a trade than losing money. All right, that's important. I'm gonna say it again. It's better missing a trade than losing money, okay? And I know you get caught up in the moment. You're like, oh my God, what if it makes a move? I gotta get in. Just relax, all right? There's gonna be another setup. There's gonna be another chance. But if you lose that money, you cannot get that money back. All right, you have to risk more capital in order to, I'm gonna say win, but in order to earn that money back. And if you want to access this document so you can keep all these points and concepts ready, it's posted in the Discord. You can go download it there and make your own adjustments. So make sure to go join the Discord and check that out. Next, we're going to talk about psychology and consistency in the market. So how to improve trading outcomes. If you're having trouble trading currently, it probably is because you have some emotion involved. Lead some impulsive decisions and increased risk. Discipline, on the other hand, rational decision making, and you have good risk management. So how can we build consistent profits with disciplined trading practices? First, you want to look long term. All right, this is not a get rich quick thing. It's about building consistent profits over time. And those profits will compound and you'll make money. It's not going to be tomorrow though. I'm sorry to break it to you. All right, so this is the door of profitability. This is how you're going to reach it, all right? First, you need to establish a reliable trading strategy, which I'm helping you do right now with Smart Money Concepts. All right, trading without a structured plan is going to lack consistency and focus, and it's going to lose you money because at that point you're just gambling, and we do not want that. If you want to trade without a strategy, just go to one of these, all right? But on top of sticking to your plan and thinking long term, we also need to journal everything we do, all right? Understanding both wins and losses, there needs to be a lesson learned from each of them. With winning trades, you still could have done something wrong, right? Hey, maybe we jumped in the trade a little bit early before waiting for confirmation. Price still went our way, but hey, next time we jump in too early, price might reverse and we're blowing the account, and we don't want that. If you want to see all these topics in live action, go check out my live trading from today. Made a couple bucks, but I use these exact concepts that I just explained to you guys in a couple minutes. If you're serious about making money in 2025, I truly believe that smart money is the way to go. Of course, thousands of strategies out there. At the end of the day, you have to do what works for you, all right? I tried supply and demand trading at first, and it didn't work for me, but there's guys out there that have tons of success doing it. This is what I use, this is what works for me, but you have to find what works for you. And with that, trading is not about luck. If you have good psychology, if you have a strategy, and you have good risk management, most importantly, good risk management, you will be successful trading. And of course, it's gonna take time, all right? With that, make sure to go like and subscribe or whatever. If you have any questions for me, go join the Discord. I'll let you guys know of all these trades, and I've chatted with a couple of you guys, great people. Glad I was able to meet you guys, and yeah, if anything's unclear, I'm gonna try to help you guys out. I mean, I'm really just trying to make you guys money. I mean, we had a lot of good days over the past few weeks, and yeah, don't miss out. Completely free. With that, I'm gonna leave you one thing. Tomorrow, we're hitting into this order block right here. I have a basketball game. I won't be able to trade, but I think we're looking pretty bullish for tomorrow. We're gonna be playing in between these two order blocks, I believe. So looking at something like this, or if we get up here, something like this, I think are great trades to take. And like I said, this document, it's in the Discord. You can go download it and have it whenever you need it. It's completely free.